Welcome to the Cattle Call here on the Rural Radio Network. I'm Susan Littlefield, and we can say welcome back to Brad. Brad Kooima joins us. He's with Kooima and Varilek out of Sioux Center, Iowa, on vacation last week. So I want to rewind 2 weeks when Brad said, whenever I go on vacation, something crazy always happens. And we know Joe joined us last week on the show, and something crazy definitely did happen in this market trade. Do not hit delete on me, Brad. We're going to take a look at a variety of different things in this market. Obviously, what was the turnaround from last week to this week? We've got the Goldman Roll underway. Where is cash at? And then we'll take a look at, I love this. We're going to look at some long-term thoughts, and I want our viewers and listeners to rewind to 2013. Lots coming up. Dive into this cattle market, and I think, Brad, first and foremost, welcome back. I hope you had a great vacation, but as usual, something crazy happened while you were gone.
Well, yeah, it's unfortunately, it seems like that's the rub of the green, I guess. Thanks for having me back on. Yeah, and no broken bones, anything. We went skiing in Colorado, and I've got 3 married kids and 9 grandchildren. They were all along with us, and we just had a great time, actually.
That's awesome.
It was really, really fun. I'm thankful for family time like that. But yeah, it's gotten to be kind of a funny deal, whether it's coincidental or whatever. Of course it is, but it seems like when I'm gone, something volatile happens, and the cattle decided to have one really sharp down day, and then a couple of others that were almost as bad. But I think the market, we've talked generally about the players in the marketplace, the people that are the mainstays of the market. And of course, we know that the funds in that community has gotten to be certainly a significant part, if not the most significant part of the deal. So we did have a nice up in the open interest here over the last 6, 7, 8 weeks. And we've seen some of that open interest come off, and that's from the funds taking off their position that they put on. We've had a nice rally. It's a bull market, right? So that's what's attracted the buying, which is awesome. But then at some point they decided to move some of that position. And I thought that's what happened last week. And I think that was the anticipation of what was going to be a big part of this week's action too. We talk about the Goldman Sachs roll a little bit, maybe ad nauseum, because there is a lot more funds than just the Goldman Sachs roll, but that's the one that seems to get advertised. It's because it's so predictable. It starts the 5th day of the month prior, and it lasts for 5 days. So everybody knows when it's going to happen. We even know generally how many numbers are going to get moved. And this year they tell me it's going to be about 20,000 less. In other words, there's 20,000 less Aprils they're going to buy compared to the Febs they're going to sell. So I know this is boring, but I'll get to the point. So the last couple of days here, we've had a huge drop in the open interest in the Feb cattle. It was 12,000 yesterday and 9,000 the day before. So that, you go, okay, well, the longs are getting out. So how did the market handle itself? Well, it was up a tick yesterday and up almost $1 the day before. To me, very impressive. The market took a lot of selling and didn't break. The old saying here, another one of them, I've got a lot of these. When you whip the horse, he had better run. Okay. So they sold that much Feb cattle and still didn't break. I guess if I was a short, I would be kind of like going like, whoops, wait a minute here. Well, how come we didn't break when we expected it to break? So it's been an interesting couple of days for nerds like me that follow the nuances of what open interest is doing.
So what are your thoughts? I mean, obviously with the Goldman roll and everything else going on, what are your thoughts on this cash market midweek, kind of on the quieter side? Is everything going to kind of hold until Friday?
I think, I don't know how far this program goes, but if you're somebody sitting in Kansas and you're going to go like, weather's fine here, he may have a different perspective than those of us that are either in northeastern or northern Nebraska or where I live in northwest Iowa. I think that feeder has got quite a bit of resolve. For him to say, okay, I'm going to take less money for cattle that I've fed now for 3 weeks and they haven't grown a pound. In fact, they might have gone backwards. I think that person's going to have a little more of a bow in his neck and think that there's no reason to take less money than last week. Last Friday, I was bid $1.60 on some black confinement cattle that I passed. Okay, I'll just be honest, because I thought obviously that I was going to get more for them this week, and I still do. I think the market's steady at worst, and I really think as we get these packers a little closer to the knife and get back to where they're killing big, note the kill levels, that maybe we can get them to where they need to buy a few cattle here again, and they're killing big because they're making lots of money again. Big rally in the boxes, and their margins are very much positive again.
Well, I think we could definitely rewind a conversation we had, just not even a month ago, Where there was some concerns about shortened kills and everything else that was going on because of lack of fundraising.
Right. Whatever little, Crimea River, or there's the world's smallest violin playing, yeah, it's, you're right. They make a big deal out of when their margins slip a little bit. To me, it's characteristic of a bull market. That means there's not enough cattle to go around.
Beef numbers, obviously seeing some higher trade going on there. Is that going to continue the rest of the week?
Probably not. Okay. I'll do one negative comment here. As this slaughter level has gone back to normal, these 127, 128s a day compared to the weather, stress slaughter, now that you've pushed a little more meat into the channels, I would suppose that we could pull back a little bit on the boxes. I'm not worried about that. I don't think that that's a game changer. I think the packers got a lot of margin, even if we do lose $3 or $4 or $5 here in the boxes here in the next week or so.
All right. I mentioned at the beginning of the show, we were going to do a rewind back to 2013, 2012. Some interesting things happened then that are kind of repeating themselves today.
Well, yeah, and it's a good question, and I don't pretend to have a crystal ball here, and anybody thinks I do, there, just make sure that I don't. But after going through a couple of these cattle cycles, Susan, you start to try to pick up a nuance. You try to well, what happened last time? What was the catalyst that started it? What was the catalyst for the 2014 rally, for instance? What began with heavy cow slaughter due to drought in 2011 and 2012. Then the weather flipped. In 13, we started to get we had a wetter winter and we had a very wet spring, and the guys going like, well, this is cattle call. We're not supposed to be talking about what we think corn's going to do. And I'm not. I'm talking about what that shift in the weather would mean potentially to herd growth or herd expansion or retention of heifers. So in 13, that was like, it was like flipping a switch. The guys decided to hold heifers. Of course, last year we set a record of percentage of heifer slaughter relative to steers. We also set a record on cow kill for the year, for 1 year. So, if this weather pattern seems to have changed, if that holds true, and we get moisture here, not just in California and the western states, but all over, I would think that the prospects then are for that cycle to bottom when we start to retain heifers. And that's, of course, what triggered the 2014 rally. And of course, we all are waiting to see the fuse get lit, for when this next one comes. I don't know the timing of it, but the supply side of the dynamic of that market, Susan, is cut. It's there. And I don't know how you change that.
And I want to wrap up because the fact that you drove across a couple states as you headed to Colorado. So you saw the vast amount of snow that you have in the northern part of Iowa that you're in. And as you headed through Nebraska into Colorado, there was a lot of brown out there, not a lot of snow.
No, for sure. In fact, until you get to northern Nebraska, across 80, for instance, you would, I said to my wife, because I was hearing how we were just getting hammered, my grandkids have missed 9.5 days of school already. Okay.
Wow.
Yeah. And it doesn't look like it there. That's for sure. Eastern Colorado either, but the mountains got a lot of snow. But here, so just these cattle guys know what I'm talking about. But so Friday I got back, Saturday I went and looked at how much of the cattle around here. And so I'm asking the guys, so what happened to these outside cattle? Well, consumption went from 42, 3, 4 pounds to some days nothing on those really bad cold days, in Christmas time, but easily back in the low to mid 20s. So you're talking something that's not even a maintenance energy percentage. There's no question that the cattle in that impacted area are impacted in a very real way, and honestly probably don't recover. They don't get that compensatory gain to get back to where they were.
So the struggle definitely will be there for cattle in the north.
Absolutely.
Well, we welcome you back. Glad there was no broken bones, and we'll see if the market can get some excitement between now and next week, which we have another shortened week with a holiday on Monday.
That's right. Awesome. Well, I look forward to talking to you next week.
All right. Thanks, Brad. Brad Kooima has been joining us this week. As we always remind folks, commodity futures and options involve a substantial risk of loss, not suitable to all investors. And that's this week's Cattle Call on the Rural Radio Network.